Hi traders, welcome to another daily analysis. Today is December 15th, Thursday. Right now it's just 4 minutes past 9 p.m. Eastern Standard Time. So today is going to be a quite short daily analysis because there really wasn't much to talk about in the market right now. So after the yesterday's Federal Reserve rate hike, it's really, the highlight of the year has passed. Really, the last 2 weeks from now till the end of December, really not much events going on that's going to drive the market to another direction. So right now, all the point of view toward the currencies are still the same. We are still very bullish toward US dollar, bullish toward Australian dollar and New Zealand dollar, and very bearish toward Euro, Swiss franc, and Japanese yen. Now, the problem is that everything is very, very high right now. So it's really depending on your trading style. If you are a momentum trader, then yeah, you can still catch in the trend and then just keep riding the trend because nobody says the trend is going to finish just because it's high. So it might keep going higher all the way till 2017. It might give a retrace in the next 2 weeks. We don't know that. If you are a trader that looking to buy at a pullback, then it is really not a market for you. There isn't any trade right now if you're looking for a pullback. So really, there's nothing much you can do but just wait patiently. So let's look at some data. Yesterday, the Australian employment data was a mix with better employment change but worse unemployment rate. Now again, it's really highly disregarded right now, especially all the data. Really the sentiment is the main driver, and Australian dollar, it's still very strong. The only currency that it lost its ground is US dollar. So when you looking at Aussie dollar, that's the only pair that Australian dollar is weakening, but it's still very strong currency against Japanese yen and Swiss franc. In London session, S&P kept the rate unchanged as expected. And moving to London, New York session, the Bank of England also kept the rate unchanged. There's really nothing much going on as mentioned. There's not an event to trade. Retail sale data from UK was in line, and the US have some CPI data which is also in line. So really not a lot of to go on. Canadian manufacturing data was a large miss today. Another risk coming up from Canada is the housing bubble right now. So the housing price, it just keep going up, and right now the central bank is trying to introduce a new rule because they did do that for Vancouver, I think this year, and they couldn't really stop the housing price to keep going higher. And another reason is because the low interest rate environment, the ongoing immigrations and things like that, it's just gonna keep filling up the housing sector. And housing is really, really important for Canada, as this is actually their biggest sector, bigger than oil. Now, a lot of people have misconception, thought that the oil industry is the biggest industry in Canada. It's actually the housing sector. So that's why they will really want to introduce some measures before it goes out of hand. So what's gonna happen is that it really makes them less likely to cut interest rate, because if they cut it further, they're just gonna make the money more cheaper, and that's gonna fuel up more housing crisis. So although the general view for Bank of Canada is on hold, but just keep that in mind that because of the housing, it's really more difficult for them to cut interest rate. And if they don't cut, it's considered a neutral currency. It's quite good to buy, especially because the oil market has the fundamental strength right now. So it's only good to buy against, again, Japanese yen and Swiss franc or euro dollar. It's not a good currency pair to buy against US dollar, as dollar is still the strongest currency for now. So that's pretty much what's happening in the market, and our point of view is exactly the same. We still favor buying US dollar, Australian dollar, New Zealand dollar, wanting to sell euro, Swiss franc, and Japanese yen. And for Canadian dollar, you can buy against the weaker one, but don't buy against US dollar. For British pound, same thing. You buy against Japanese yen and Swiss franc, and avoid buying against US dollar. So let's take a look at the chart. Okay. So the other thing I was saying that if you like to ride the trend, you can do a 4-hour trading, you can do hourly trading, you can just ride the trend. But since it's a daily analysis, let's look at a daily chart. So for daily chart, again, back then I always say that I like to buy at the low, but now looking back at this market, it might not necessarily be the must, and that means sometimes you have this kind of nice bullish, like this one, nice bullish candlestick. Even though it's a breakout signal, it actually might not be bad to buy it, right? It's just I sort of changed my own strategy looking at this year's trading and realized that yes, buying at buying low, selling high, you do getting at a better price level. But if the fundamental is very strong, then there's nothing wrong to buy at a breakout. So just looking back, I realized all these places are not bad to buy. You don't really have to wait for this kind of kangaroo tail to buy it. You could actually buy when it's high enough. In the worst case is that you don't get filled. If you buy here, then the worst case is you don't get filled because you have 10 pips of buffer, so you just don't get filled in this kind of trade. And if you buy here, you might get filled, but this is not a good trade since there's really not much space going on. So but this is a nice one. It's just jumping out, really engulf the previous one, same as this one. So it's just my own thought in terms of daily, because the market is reacting very, very quickly nowadays. Everything become more efficient, not like back then. So really, that's just my own thinking, saying that hey, maybe buying at a breakout, it's not like the rule does not have to be that strict as long as you have the sentiment and the fundamental behind a trade. Okay, so let's take a look at 28 currency pairs. Just give me 1 second. So right now, personally, I am in I'm in 4-hour trade. I'm not in any hourly trade. I'm actually in 4-hour trade. New Zealand yen, that's the one I'm in. As you can see, it doesn't go anywhere basically, but I'm in this trade, just try to ride the trend. I was hoping to get into dollar yen, but I don't have anything in this kind of movement. I'm really still need to something to pull back around 116, 117. And same as euro dollar, looking to short, but of course it's kind of too late right now to jump in. Really looking something to pull back to 1.05 again. And again, just keep in mind it's the last 2 weeks of December, so it's going to be thin liquidity. Okay, so let's take a look at 28 pairs right here. Where is it? Okay, daily. All right, so euro pound. Now euro pound is really not much going on, indecisive. We're still here, and fundamentally, I'm actually more bullish toward British pound, but it's just not something to get into for now. Euro Swiss, same thing. They both are weak currencies. Euro dollar is great to sell, but we need to sell it at least. We need some signal or to sell at better level. Euro Aussie, same thing. It's good currency to sell. We just need a better signal. Euro CAD. This is a very not bad engulfing candle, but the only thing is that you are at this this support area. Of course, it could still go down. I mean, it really depends on how you like to trade it. Back then I would never take it. I'll say, okay, I'm gonna sell when it's high enough. But again, looking back right now, might not be a bad trade to get in, because if you just go with the fundamental strengths, it's not a bad trade to short. So I will do more analysis later on. Euro New Z, don't have anything here. And Euro Yen, I don't really have anything in this pair. Pound Swiss, again, it's a neutral area. Pound dollar, it's going down, but we're still really quite within risk range. Pound Aussie, and pound cat, same thing. The reason I like Euro cat better, it's because if you look at this, the candle does not close low enough, right? It doesn't penetrate anywhere. It doesn't basically give you a low that is lower than yesterday. But if you're looking at EuroCAD, it actually gives you a lower than yesterday. Now the only thing you need to watch out is 1.38 seems to be a very strong support, so that's something you need to take into consideration. So cable cat, pound New Z, again, not much going on here. Pound yen, and Swiss franc, Japanese yen, dollar Swiss. Again, dollar Swiss, it was a nice candle, but this was the day of the again, like I said, if you are fine with buying the breakout, all these are very good candlestick to riding out the trend. Dollar Swiss, dollar cat, and dollar yen. Just keep edging higher. Aussie Swiss. Aussie Swiss really doesn't have anything going on right now. Aussie dollar have a large drop yesterday, but I don't really like to get into this because they both are quite a strong currency pair. Aussie CAD, same thing, and actually more bullish toward Australian dollar. Aussie New Z, same thing. You got a nice candlestick, but they both are quite strong. I'm not really in favor of either one of them. Aussie yen. If you want to say, I actually think New Zealand dollar performed much better back then. CAD Swiss is not bad. Again, it's a very solid candlestick today. CAD yen, UD Swiss, UD dollar, UD yen, and UD CAD. So that's pretty much it. Like I said, not much going on, but if you are fine to buy or sell at a breakout, then yeah, EuroCAD, providing the fundamentals still in shape, then EuroCAD, of course, it is still going to go down. And the other one, which was the other one was talking about, is it Pound? It's not Pound CAD, it's Pound New Z. Oh, I forgot the other one. Dollar Swiss, dollar CAD, dollar yen. I think it's Aussie CAD. No, I think it's Aussie New Z, Aussie yen. Which is the one I was just mentioning about? Not Aussie yen, CAD Swiss. Yeah, CAD Swiss. Okay, so EuroCAD and CAD Swiss are the two pair that not bad to buy if you like to ride the trend. It is really, of course, you have you have more resistance ahead of you, but just understand that you do have a good fundamental behind you to riding on this kind of trend. So you could buy it if you want to do it. I'll do more analysis, but CAD Swiss just fundamentally is not a bad pair. Same as EuroCAD, fundamentally is not a bad pair to short if you're thinking about it. So that's pretty much it, guys. I know there's not much going on, and if those of you who ride on the US dollar trade yesterday, congratulations. That's a very good trade to keep holding it, and hope everyone will make some pretty good profit. And other than that, I'll be back tomorrow for a Friday recap, or I do it Monday. But other than that, play safe. Really, after tomorrow will be very quite thin liquidity, and really, enjoy the holiday season. I will see you tomorrow or next Monday. But Happy New Year. It's kind of early to say, but then it's just a lot of you are already taking a holiday off. So I'll see you tomorrow or next week. And other than that, if you find this video helpful, if you have any question or comment, just let me know. I'll be more than happy to answer your questions. Okay, thank you very much. Thanks for watching. Have a great evening. Thank you, guys. Bye bye.